We're going to get to everything Jay Powell said, but I'd first like to ask you about this $1.9 trillion package being passed or proposed by Joe Biden on top of the $900 billion that was just passed. It feels like a couple of weeks ago. A lot of money. Is it going where it should from what you see so far?
So there are arguments why there could be more stimulus needed. For example, to provide more aid to states and local governments to help with the vaccine rollout and make sure we get the vaccine out to as many people as we can, as quickly and efficiently as we can. But I am concerned about the discussion of the latest stimulus. Anything near $2 trillion feels like a lot of money. Markets have looked the other way as the U.S., which already had a large debt level, issued a lot more debt. It was able to finance that, and we can hold more debt than in the past because interest rates are low, but debt is not free. We will have to pay some of this back, and this is a lot of money on top of what was already an unsustainable path for our debt. And the other reason I worry is that this stimulus doesn't feel very well targeted. There are some parts of a stimulus that might make sense, that might help make the economy recover faster and be more efficient, but some of this feels rushed out so quickly, you have to wonder if it is being spent effectively.
So, Kristin, what do you think it will do for the economy? Because that's what the Fed is watching so very closely. It still seems as 2021 gets underway that you want to figure out what the Fed's going to do. Well, tell me what the virus is going to do and how much vaccines are going to do to stop it.
So that's a challenge with the stimulus right now. Again, parts of the stimulus that are targeted directly at getting the vaccine out, helping the economy recover, that makes sense. But if parts of the stimulus are just putting more money in people's pockets, some people may not need that money. Some of this money will go to people who have been working, have been paid, and whose savings is already high. It's not clear how that will necessarily help the economy recover more. There's actually an interesting example from the UK and Japan, where they provided a discount to get people to eat out more. Basically gave them in the UK 10 pounds to eat out. People took advantage of that. They went out, they ate out more, but then the virus spread more quickly. And you can actually track some outbreaks to getting people out spending before it was time. So that's also something to be cautious of. We don't necessarily want people to go out and spend right now. We first have to get the virus under control.
What about the funding for the stimulus package? Because we've heard from Biden officials saying that they won't be relying on offsets. They'll instead just rely on federal borrowing. Is that the right model, or should they be raising revenue to fund this? Because obviously the justification is that in these unprecedented times, it's not the time to worry about that widening budget deficit.
So there has been this interesting breakdown. There's a lot of economic research that shows historically that when countries had more debt, then when a recession hit, when a crisis hit, you couldn't issue a lot of debt. Markets weren't willing to fund it. So having a high debt was a constraint on how much debt you could issue. That seems to have broken down around the world during COVID. The pandemic was seen as or let people issue more debt and they could fund it easily and not worry about the funding now. That was an issue to worry about later on. But that's not going to last. I think as we recover from the pandemic, markets will start to pay attention again to debt levels, to deficits, to how that debt will be financed. So it's been a question brushed to the side, but that doesn't mean it's going to be brushed to the side forever. And again, that's why I worry about talking about another stimulus that is so big. This is money that will have to be paid back at some point.
Of course, the other thing that markets have been preoccupied with is the idea of an earlier than expected taper of bond buying from the Fed, right? And we heard from Fed Chair Powell overnight, and I thought it was quite interesting, the sort of balance that he was striving to strike, right? On the one hand, he had said that, no, rates won't go up until we have troubling inflation levels. On the other hand, he was also pretty optimistic, saying that we're close to pre-COVID levels of growth in the economy.
Yeah, this debate, this parsing of what every Fed speaker is saying about exactly when we're going to taper, I find somewhat amusing. It reminds me a bit of Groundhog Day. not the movie, but the great American tradition in February. The clock goes out. If you see the shadow, spring will come on a certain date. That's what this discussion of tapering reminds me of that, in the sense that we're trying to make forecasts based on basically no information. Right now, there is no grand plan. Fed officials don't know when they will begin tapering. They've tried to lay out some of the guideposts they'll be watching, but even in normal times, it's very hard to predict how the economy will evolve. And this is not a normal time. It's even harder to predict how all these variables the Fed is watching, inflation and employment, how those will play out. So Fed officials don't know when they'll begin tapering. So I do worry that everyone is trying to read far too much into every little utterance and every word of a Fed official. They've laid out what they're watching. Now let's see how the economy recovers, and we'll start to talk about tapering.
But it makes me think of 2013 in the taper tantrum, when you talk about parsing every word, where Ben Bernanke just casually said, yeah, at some point we'll stop buying fewer bonds, and whoosh, there went the 10-year bond yield. But let's listen, just for fun, Kristin, to what Jay Powell said today.
Now is not the time to be talking about exit. I think that another lesson of the global financial crisis is be careful not to exit too early. We'll let the world know. We will communicate very clearly to the public, and we'll do so, by the way, well in advance of active consideration of beginning a gradual taper of asset purchases.
I think why people are so focused on this, though, is everyone's just trying to get a sense, Kristin, of if the economy gets a lot stronger. Last week, we talked to Loretta Mester, Cleveland Fed president. She's expecting this solid rebound by the second half, because the vaccines will be distributed, she thinks, to most of the population. So I think a lot of people are wondering, okay, but if the growth really does pick up and jobs start growing again and you've got all this federal stimulus, won't the Fed even think about tapering? I guess Jay Powell said, well, when we do, we'll let you know.
Yeah. So I think what Powell is trying to say is, don't, just because the economy starts to recover, we're not going to jump to remove stimulus right away or to taper right away. And that makes sense, because just as a few people have started to talk about it, you have seen the long end of the yield curve go up. And if that long end of the yield curve continues to go up, in some sense, the financial conditions will already start tightening without the Fed even doing anything. And he doesn't want to lose control of that. He doesn't want to see things tightening prematurely. But at the same time, I don't think it's such a bad thing that people are talking about this, because that means you won't have the sort of surprise and the sort of market snapback that we saw during the taper tantrum before. So again, some of this debate is healthy, but it also makes sense for Powell to manage expectations. It's not going to happen soon. We can talk about it, but it's not going to happen soon.
In terms of the I guess, broader economic outlook for the US, how much have the political events of the past week been playing on your mind? Does it impact, I mean, obviously the orderly functioning of government impacts, but also are you more optimistic that under a Biden-Harris administration, there's just going to be more order generally, be it talking about relationship with major trading partners, or be it within the domestic governance of the country itself?
So there will obviously be a shift in government. There will be a shift in policies. I think it's still early to see exactly how some of that will play out. Some of the policies that have been acted in the past, for example, some of the shift to the anti-China sentiment, some of the anti-trade sentiment came from the Trump administration, but I think it runs deeper than that. So we may not have a big shift away from that some people are expecting. I think, but I'd like to get back actually to your earlier question about there was some optimism. Jay Powell was optimistic. Loretta Mester has been optimistic about the outlook for the economy. I think far more important than any specific policy that's adjusted is going to be how the virus develops. And there are a lot of positive developments. With the vaccine coming out, there is a good chance we're going to have a very strong recovery, and that will dominate the news.
Kristin, quick comment from you, because you are known for your work on watching currencies and the dollar. Weaker dollar, strong dollar. How's the Fed going to fix it, deal with it? Sorry.
Well, short term, if there is a large stimulus, that traditionally that does mean a weaker currency, because that does raise concerns about prices picking up. But then if we have a very strong recovery, that will make the US an attractive place to invest also. So there's a lot of forces at play, and the dollar is the global reserve currency. Although there are certainly risks in the US, concerns in the US, it's not clear that there's another currency that is more stable and more promising right now.